Hello, everyone. My name is Shenyuan Hu. I'm the founder of Joint Commonwealth Fund, or JCF. It's my pleasure to be inviting all of you here for our webinar series, which we will hold weekly. A brief intro about JCF. So JCF is a crypto index fund. The purpose is to realize basic income that can make it universal. But if you're interested, feel free to check out our official website at jcf.world. For today, what I would like to talk about is basically the concept of a crypto index fund. Okay, so just hold on a sec. Let me show up the slides here. All right, so today what I would like to do is to share with you about what a crypto index fund is, okay? So probably many of you, some of you might have heard of index funds and cryptocurrencies, but exactly what it is. So this comes back to, okay, so it starts with the question of what is an index fund. And it starts with this old man here. His name is John Bogle, John C. Bogle. He's the inventor of index fund back almost 40, 50 years ago. So at that time, he was actually a graduate student. The concept of a index fund starts with, you know, John's passion and his interest in trying to identify what's the best fund to invest. Because you know, with people, when you have some money and you like to invest into, like, say, stock market, one of the ways is you can investigate and study which funds to invest by looking at the company. Okay, you can do a financial analysis of the company and find out which companies are good, that's worth holding for a long time. You can buy their stocks and get paid by dividends, or through the rise of its stock price, basically the capital gain. These are all the funds one can invest. But then, of course, the question becomes which companies to pick. Okay, and for someone like Warren Buffett, one of the richest person, and also a very famous investor, he can basically read from the first page of a company directory to the last page of their financial statements to identify what's the best company. But it's probably not a job for you or me or for most people. So the ideas of funds, which means that people buy into a fund and put money, delegate into a fund manager to choose which stocks to invest on their behalf, later came out. So this is called mutual funds, okay? And also there are some called hedge funds, which work with similar logic, okay? So, but not actually, all the funds do perform well, especially over a long time. So John looked at this and said, how to choose a fund itself is also actually a difficult question. But what he observed is that, over a long period of time, if the economy is growing in a country or region, the stocks market generally goes up, over time. So something like this, a curve like this. This is actually, of the past from 2011 to 2018, okay, of what's called the S&P 500 index, which comprises of the top 500 companies in US. So John came up with the idea that, instead of betting on a single company, why not, just buy the whole basket, all of them, right? So that, if the whole stock market goes up, then you will gain profit from it. So if you look at this, so he founded what's called a Vanguard. And Vanguard is one of the earliest and oldest index fund. It's also, I think, now the #2 fund in the world with trillions of dollars under management. And if you look at this graph closely, what you will see is the green line here, that's the actual S&P 500 index. That's grown during this period 200%. Okay, and all these other lines are the index funds that tries to track closely the actual S&P 500. So they have various performance, but pretty close, like 198.5 to 196.0%. And so that's the basic logic behind index, which is you invest to not just a single hand-pick investments, but you invest in what's called the whole asset class, or maybe a subset of the asset class. Now, even like active investor like Warren Buffett, who does put the time into studying the stocks, the companies, and decide which one to buy, also had mentioned that for most investors, whether it's institutional or individuals, the best bet for you is to pick an index. The reason, well, you're not Warren Buffett, you don't have his expertise, his passion, his experience in terms of identifying and choosing which companies to invest. So the safest way, actually long-term, is for you to bet on the overall market. And also because index fund, they don't really have a whole large research team or expensive fund managers to pay for salaries. So index funds typically can have a really low management fee annually. And when you add that up over 5, 10, 20 years, that actually makes a big difference in terms of the profits that you can gain. So this is just a graph to show you the difference between index and other things. So you can see here, the top blue line here is the actual market, overall market performance over a 40-year time period. And during this time, you can see Vanguard index tracks pretty much closely behind the whole market. And then equity mutual fund and then high fee mutual fund, they actually have much worse performance when over a long time than an index fund. So index fund, through research, has shown that it beats 90% of the actively managed fund in terms of its long-term performance. So now we are to the topic of crypto funds. If you have bought into the idea of, if you understand how index fund works, then as a casual investor or like someone who would like to invest, but you don't really have the time, the interest, or the energy to actually do the study, you agree that index is the best bet. But how can you choose? So for cryptos, Bitcoin started in 2009, right after the financial crisis of 2008. And the price has grown all the way, from less than $1 to over 20,000 last year. And this year has dropped to about right now 3,000 to 4,000. But if you look at the actual fundamentals of crypto or blockchain technologies, then you might expect or predict or see that over time, 5, 10 years, it could be on a positive upward trend. And this is a topic beyond today's webinar, which I also encourage you to look at our previous webinars on this topic. But the idea is that if you agree that cryptos or blockchains will be on a rise in the next 5, 10, 20 years, and you would like to take part of that, index fund probably is a good and safe way to invest. But the question becomes, how do you pick? Okay, how can you pick the right one? So there are some criteria about how to choose the best crypto index fund. And of course, what you want is to balance, on one hand, the potential value that the profit you can generate versus the risk that you're taking. Okay, so there are various aspects that I'd like to first point out. The first is for a crypto index fund, that means an index fund investing in cryptocurrencies. You can first look at it through how many coins or tokens it's tracking. Okay, like some funds, they track the top 30 of the cryptocurrency, which currently there are about 2,000 and over 20,000 exchanges around the world. So how can you actually choose? You don't, right? Not even experts can predict which ones will win. But most likely, the coins in the top are less likely to fail. Okay, so it's kind of a safe way to choose the top 10, top 20, top 30. So how many tokens it's tracking? That's one measure you can look at in the index fund. The second is called fund weightings, which means that, so how, let's say you have $100, how are you going to put into allocate into different cryptos or different assets? So the way you do this typically is through its market capitalization, meaning that, okay, let's say Bitcoins right now, if it's 50% of the whole cryptos. Right now, Bitcoins is actually about like 53% of all the cryptocurrencies value. So by that approach, you might want to put half of your money into Bitcoin. But there's a potential risk in this, in that while it is true that simply by market capitalization you should have half of your assets into Bitcoin, but that could potentially be a risk as well. A risk in that it's possible that if Bitcoin drops a big deal, then your asset, your whole portfolio is affected. Also, some smaller coins or altcoins, they might have potential at some, in a bull market, they might have higher growth than, the familiar Bitcoins. So that way you might not actually take advantage of the higher growth rate of the altcoins. So some funds, they have a cap in terms of a particular asset, a crypto, how much they will own. Some put the cap at 20, some at 30. Okay, there are different ones. And then there is what's called the rebalance period. So an index fund, basically its mission is to track the index. However, that index has been defined. And by that, I mean basically the growth curve, the curve of the whole index. If the fund can closely mimic the curve, then it's considered as a good tracker of the index. But how this is done? Because the assets do change their prices frequently. So you have to sort of shift the weights of how much you're putting into this coin versus that coin. And that's called rebalancing. Okay, so this can be done with a typical interval, a fixed interval from say a month to maybe 2-3 weeks. So for traditional stock market index, they might do a rebalance, meaning adjusting their holding ratios like every 3 months, every quarter. But because cryptocurrencies are much more volatile, it changes ups and downs quickly. So the typical rebalance period is shorter. It can be 1 month or even less, like a couple of weeks. Okay, and then the next aspect to consider is how much fee you're actually paying, because as we mentioned, index fund beats actively managed funds, both because it's easier to manage, but also because it has lower fee that doesn't eat into your potential profit. So here, different funds have different fee structure, but typically you can look at it through like how much you have to pay when you purchase, and while you're holding, how much to pay annually to manage the fund, to sort of as a management fee. And is there any fee to pay when you exit, when you sell back, And the next criteria to look at funds is what's the minimum investment amount. Because some funds, actually, they are not open to just anyone. A lot of the funds, especially funds that are involved maybe with high-risk assets, high-growth, high-risk assets, actually cryptos will fall into that category. In order to protect people, you might ask, require that people investing are what's called accredited investors. So that means they have to pass certain criteria, like certain amount of net worth, or they are experts and professionals in the financial fields. And usually the minimum investments for these funds are, at like 10,000 US dollar to 25,000 US dollar. So the minimum amount of investments, that's another criteria you can look at to categorize the funds. Okay, and the next point, this is actually related, the next 2 points, which deals with how easy it is to get your money back. Okay, let's say you need the money for some emergency purpose. Can you quickly change or liquidate your fund holding, your fund assets back to cash? Okay, how easy is that to do? So there are 2 ways to do this. Usually in a typical fund, what happens is in the traditional funds, you buy from the fund, and also you redeem back your cash with the fund. And then later there's what's called exchange traded funds, ETF. So these funds you can pretty much like buy and sell them just like stocks on the stock market. So these are easier, but they do charge some transaction fee when you're doing that. So some crypto index funds, they will issue their own tokens and have it traded on exchange. So this way, by simply selling it off on the supported exchange, you can get your cash back. You can liquidate it quickly. Okay, so whether it's exchange traded or liquidation, this is another area to consider. And then finally, there's of course the total amount of assets. Okay, so how much assets the fund is managing usually demonstrates the experience level, the maturity, and also whether it's also a measure to see whether it's well protected. Okay. So these are some of the ways you can identify and look at the differences between different funds. Okay, but so how can you choose? How do you actually choose? Now, these are some criteria that you might want to look at when you're looking at the fund or choosing which one to invest. So first is we can start on the right. Maybe one aspect is the experience. Okay, how much experience you expected, and if it's an experienced team, whether in the crypto field or in maybe developments or in the financial markets. Okay, whether the team is experienced. The second aspect, whether it's custodian guarded. So what this means is that a crypto index fund basically receives some money or maybe crypto investments from you, from the investor. And then what it does is it uses these assets, minus some maybe minor fees. You will then use to allocate all the assets to hold, the top 10, the top 20 cryptos, for example. And once they acquire these assets, this is for them to manage, to keep for safekeeping. So whether this is kept safely becomes an important question, right? And you might have heard on the news, there are hackers that hack into exchange and bring these transfer these assets out, like millions of dollars worth of cryptocurrencies. And we read this on the news like all the time. What happens is usually experts, typically crypto experts, agree it's not safe to actually keep your assets on the exchange, because the exchange can be hacked, there can be some problems. So the recommended way to safeguard your crypto assets is to have your own personal wallet, okay, typically in the form of a USB disk you can keep reliably offline so that no hacker can tamper with it. So you can store your assets, private key inside those USB disks. So again, if a fund is managing a lot more assets, are they storing their assets, on these what's called cold storage, USB drives devices, or not? Becomes an important, question you can ask. Because if they store this on the exchange, then there's always potential risk of the exchange being hacked and their assets being transferred out or stolen. Okay, and thirdly, of course, it's the low fee consideration that we talk about. Index fund acquire their reputation by having low fee. So again, for crypto index, if you can have fees that's lower, that typically means it's better for your profits margin over the long term. And also another aspect to consider is whether it's based on a solid and diverse index. What this means is that there are many different ways you can choose an index. For example, there's what's called Crypto 20 that is formed by the top 20 cryptocurrencies. And then there's also index fund that invest in only the top 10. But also there are some that are like Coinbase. Coinbase is the largest crypto exchange in the US. And it's listing only a few coins. Actually, in fact, the beginning of this year, probably just four cryptos out of over 1,000. But later this year, they have added more. So now they have about 8. But they simply build an index fund on their 8 cryptos that they're supporting. Okay, so that's not by market capitalization. That's simply by their choosing of what they believe are solid long-term cryptos. And finally, whether the fund has independent custodian, this is also an important aspect. What this means is that every time you are, the fund managers is transferring some assets, let's say from the cold storage to the exchange for rebalancing purpose, whether the person can do this alone or they have to do it with others, okay, with some maybe outside custodian. That's a measure of, again, how safe these assets are being kept. And of course, if you can have separate entities, you have to get their mutual agreement and consent before you can move assets in and out of the fund. Then that's probably better protection than if the fund can simply be decided by an individual, for example. Okay, so now let's talk about some. So with those basic, let's talk about some specific funds. So this is the Coinbase Index, and as mentioned, it's offered by the largest crypto exchange, Coinbase, in the US. So what happens is right here you can see there are about 8 cryptos. That's what they currently support: Bitcoin, Ethereum, Bitcoin Cash, Litecoin, Zcash, Ethereum Classic, 0x, and also there's one more. Okay, so what happens is these 8 coins are currently supported by Coinbase, and Coinbase is simply building an index fund of these 8 coins. Okay, and also holding them according to simply market cap. So you can see that right now, Bitcoin actually is like 80% of all their holdings. They simply use, market cap as the holding ratio. So this is Coinbase, okay? And the next one is called Cryptos Fund. Cryptos Fund is one of the early, maybe perhaps the earliest funds out there. It's investing in the top 30 cryptocurrencies, okay? And what happens is it's also listed on some exchange, okay? So it does have, but the minimum investments is it's listed. It has listing in some of these places where they're tracking, and the minimum amount of investment is $100,000 US. Okay, so that's not a small amount. What this means is also that cryptos fund is targeted at sophisticated investors who have certain assets, minimum amount of assets they are able to invest. And the fees for this fund, it's about 1%, okay? But otherwise, it doesn't have other fees. Okay, and then thirdly, we want to talk about Crypto 20. This is actually the fund that I personally like and appreciate the most because it's very low barrier, okay, for individual retail investors. You only have to invest like a few, less than $100 you can also do investments. And it's holding the top 20 cryptocurrencies out there. Okay, so it's called Crypto 20. And it has a relatively low management fee. It's about 2% when you purchase, but then every year it's 0.5%. Okay, so you can see it's about half of that of the Coinbase offering in terms of management fee. And also it's quite clear, how much they're holding. And the way they hold these 20 cryptos is they do have a maximum cap. That's 10%. Okay, so you can see that. Like the largest one, Bitcoin, right now it's having actually 12% in terms of its holding. The reason is it caps at 10%. So it doesn't heavily rely on any specific coin, and it doesn't want to be affected by that. But because rebalance happens every 2 weeks for Crypto 20, so you do see some rises of the ratio. Like here, Bitcoin has risen to 12.4%, for example. Okay, so this is a fund that is easy and it's easy to use and to manage, and also to have a low barrier to invest. Now I can show you, basically a comparison of this is someone who has compiled, based on Crypto 20 to see how it compares against other known funds. So for example, Crypto 20 tracks the top 20. This is old data earlier this year. Actually, when Crypto 20 starts last October and finish about end of November for 1.5 months, it has accumulated about 30 million of assets, which has grown about fourfold, 4 times of that. So its market cap about 10 maximum weighted, and it rebalances weekly. Okay, it has a 0.5 annual fee and no minimum investments. You can invest pretty easily. So some other funds like Coinbase Index, the one we've mentioned, there's a minimum investments and also higher fees. Actually, it's reduced to 1% now, but this is older data, so it says 2%. And it's simply market cap weighted. Okay, so as we saw, the Bitcoin has actually 80% of presence in Coinbase Index. And there's the whole 10, but what happens is this again, it has even higher barrier, 25,000 and US only for you to invest. And there are some other funds, okay, so like these two, TAS Fund and Bit20, they basically, okay, this is an active management fund, so let's talk about Bit20. Bit20 is also pretty much index-based with a 10% of maximum. And it's like Crypto 20, it remains in the top 20, okay, 20 cryptos. And it has lower fees, as you can see, okay, because probably because it also tries to democratize this investment strategy. But other aspects, Bit20 is simply a simple index, and there aren't other more analytical aspects to that. Okay, so you can see Crypto 20 is probably, it's one of the later offerings into the fund space. It has relatively complete features in terms of what an index fund should have. So our fund, JCF, is actually closely modeled after Crypto 20, except that what happens is we are open, meaning that we continuously accept new funding. Crypto 20 actually is already closed, so you can now only get them on exchange. And also, another difference is that we do pay dividends back to the holders. We move all the profits into a dividend pool that pays regular dividends back. So this way, people can actually get more tokens through the dividend mechanisms as a form of passive income. And so to know the difference, please go to our website and you can visit at jcf.world. Okay. So, but one of the last remark is that well, there are many, likely there will be more index funds that will be continuously be built and construct around the crypto boom or the potential blockchain trend. What happens is most of them do focus on financial gain as the main motive. And while this is important, we also recognize at JCF, we recognize it's also important to actually let not just the rich becomes richer, but to let everyone have a chance to rise up, to become better, have a better life as these new technologies are introduced to societies. So this is why we try to bring a social purpose to index fund by having both dividend mechanism, but also we redistribute the profits of the fund to people, so that people as a whole actually their income can all rise up, or their passive income can also rise up. So for more information, please go to our official website. And if you have any questions, feel free to leave message on our Facebook page, or or you can shoot us an email to ask. So thank you very much for your joining us here, and we'll look forward to you next week. Okay.